Hi and welcome to essa News 4, brought to you by the essa Consultancy in London. We are a marketing and sales consultancy in the service department sector, and should you require any help in those areas, then please get in touch with me, Richard, via our website. You can also see us on Twitter, where we have over 17,000 followers, on LinkedIn. Please link to us on LinkedIn and join the essa group, and on YouTube. Please subscribe to the essa channel on YouTube. Okay, before further ado, let's crack on with some news. The first section will be a summary of the news from Buying Business Travel magazine. Marriott Residence has opened in Edinburgh. Staybridge Suite, Stratford, due to open in July. We've got Clarendon Apartments in the City in the Barbican, and Hammersmith, both new openings. Stay City Apartments opening at Heathrow in May. Bridge Street have launched a satisfaction guarantee. If the key is not ready or internet not working when you arrive at the apartment, then the first night is free of charge, and the following night at 50% reduced rate. Staying Cool have expanded its portfolio with a second property in Birmingham in the Rotunda building, and planning to open in Edinburgh and London. Skyline Worldwide opens at West Ferry in Canary Wharf in April. Fraser's Residence Bishopsgate opened in February with 26 units. Fraser's Place Canary Wharf adds a further 33 units in March. And finally, we have the Cheval Calico House, just reopened after refurbishment of all 45 units, and obviously in time for the Olympics. Next piece of news is from our cousins in the hotel sector, Hotels.com, and their Hotel Price Index report, an optimistic forecast for the future. I'll just read this. The relative strength of the global hotel sector can be seen as an indicator of a potential turnaround in the economic outlook, with the average price of a room around the world rising 4% in 2011, according to the latest Hotels.com Hotel Price Index (HPI). The continuing strength in corporate travel in particular, helped to push up demand and room rates, although prices were still generally lower than in 2005. The HPI looks at prices that people actually paid for their hotel room around the world. Last year prices fell 2% in Asia year on year, but rose in all other areas, 8% in the Pacific, 5% in North America, 4% in Latin America, 3% in the Caribbean, and 2% in Europe and the Middle East. The overall increase reflected a continuing trend of steady recovery after a 13% tumble in 2009. You can see a report on that at www.multiview, so multivu.com, and from there I would search further. Dolphin Square and their long stay rates now £135 in a one bed, 135 in a one bed Dolphin Square for long stays. Next is a promotion from Citadine. Enjoy one free night in Barcelona for a minimum of 2 night stays at any participating service residence. Book and stay a minimum of 2 nights in any participating residence from now to the 31st of August 2012 to enjoy one free night stay in Barcelona from the 1st of November to the 28th of December 2012. I'd see there at the website for further details. There are a selection of European properties, France, Munich, UK. Participating, stay there for two nights or more, and you get a free night in Barcelona. Deep Blue have reduced the minimum number of nights during the Olympic period, now 14 nights generally speaking. In the larger apartments, 3 and 4 beds, it's a minimum of 28 nights. That's Deep Blue. Metropolitan Apartments, Park Lane, London, Right, we have 19 luxury serviced 2-bed apartments which benefit from all the facilities and services of 5-star Metropolitan Hotel on Park Lane. These include 24-hour room service, complimentary gym access, concierge services, access to our newly refurbished Met Bar and Spa, complimentary Wi-Fi, and much more. Please also be reminded that our premium apartment, 23 Hertford Street, is also available. In 2012, they're running an offer for long stay guests of 3 months or more, which gives 20% off in the Met Bar and Spa. Close neighbours on Park Lane, the newly refurbished and reopened, or redeveloped and reopened Grosvenor House Apartments. Spring offer: pay for 5 nights and stay for 7. Available on all residence types. This offer includes continental breakfast and complimentary Wi-Fi throughout your stay. Valid for bookings between the 1st of March and the 31st of May 2012 only. So between 1 March and 31 May. Flipping over to Australia, this is from the website theaustralian.com.au. An unprecedented surge in leisure cruising has sparked a huge spin-off for service department operators who report increased occupancies and yields when the big liners come to town. Some service department operators admit to hiking room rates by as much as 40% whenever a luxury liner docks, while Deloitte Access Economics reckons cruise passengers pumped 790 million Australian dollars into hotels, service departments, retail shops and restaurants last year. Staying in Australia, this is from the website observer.com.au. Service departments to outperform hotels in next 3 years. The service department sector is forecast to outperform the hotel sector over the next 3 years. This is in Australia, of course, according to the latest service departments review by Atchison Consultants. Atchison Consultants is forecasting total returns of between 13% and 15% per annum on an ungeared basis for service departments, while total returns for hotels are expected to range between 10 to 11% per annum. Rental growth in line with CPI is expected for service departments. Occupancy rates will reflect growth in GDP, which will remain positive, says the report. Returning to the UK, we have a report by Savills. They say the service department market in the UK is performing well and has potential for further growth, making it an attractive property investment opportunity. The new report by Savills into the state of the sector highlighted the high occupancy rates of this sort of accommodation, in addition to strong yields that are more favourable than comparative asset classes like residential real estate in the private rental sector (PRS). According to the firm, investors can expect yields of 6.25% on service departments in central London, compared to 3.8% return currently generated on prime residential properties. Meanwhile, vacancy rates for service departments are considerably lower than those recorded in the hotel sector, which means they may appeal to investors who typically target assets in the hospitality industry too. News from May Kemble, Claverley Court in Knightsbridge. The latest and most exclusive of May Kemble's service departments has just opened its doors in Knightsbridge, London. Splendidly located in a quiet cul-de-sac round the corner from Harrods, the 16-apartment property raises the bar in luxury accommodation. Exotic marbles, natural woods, Italian carpentry and designer furniture create chic, comfortable surroundings, ideal for short stopovers and extended stays. So that's Claverley Court, Knightsbridge through May Kemble, Maykenbel, maykenbel.co.uk. News from outside London. This was on the website This is Derbyshire Co. UK. A Derby accommodation firm has seen revenues increase by almost 2/3 and has doubled its workforce to cope with the growing demand for corporate and leisure clients. Birchover Hotel Apartments, which runs 70 luxury 1- and 2-bed apartments in Alstree and Darley Abbey, has employed 6 new staff. The firm has experienced a big increase in occupancy levels over the last year. Birchover Hotel Apartments General Manager Carl Bridge said 2011 was a tremendous year for the company. Revenues increased by more than 60% and we exceeded our targets massively in terms of corporate, leisure and wedding accommodation bookings. 2011 also saw Birchover Hotel Apartments named Employer of the Year by the University of Derby at its annual Career Development Centre Awards evening, having regularly recruited staff from the Student Employment Agency. So that's it for this week. Thank you for listening, thank you for watching. Please keep your news coming in and look forward to speaking with you again next Monday. Thanks a lot, bye.